The top business stories live from the Sky News City studio. A blow for the Chancellor as borrowing comes in higher than forecast, but in better news, business activity has hit an 11-month high. The FTSE 100 continues to rally. It's climbed to a new all-time high this morning. Plus, made in the UK, sold to the world, the small businesses being honoured for their exporting success. Good morning, this is Business Live with me, Ian King. Government borrowing this morning, we learned, was much higher than expected in the last financial year, casting doubt on the Chancellor Jeremy Hunt's ability to cut taxes again ahead of the general election. Well, the Treasury borrowed £120.7 billion in the last financial year, according to provisional estimates from the Office for National Statistics. That was down £7.6 billion on the previous financial year, 2022 to 2023, but it was £6.6 billion higher than the Office for Budget Responsibility was forecasting just a month ago at the budget. Well, separately, there was brighter news for the Chancellor, with a closely followed survey suggesting business activity hit an 11-month high this month. The Flash Composite Purchasing Managers Index survey, in which anything above 50 represents growth and anything below that a contraction, had a reading of 54.0. That was up from 52.8 in March and better than expected. Well, separately today, we learned that grocery price inflation has fallen this month to its lowest level since November 2021. The latest data from the analytics company Kantar suggests grocery price inflation fell to 3.2% over the 4 weeks to the 14th of April, representing the 14th consecutive monthly fall. Kantar said the fall was helped by a big rise in promotions over the Easter period, with items being bought on offer, making up 29.3% of supermarket sales, which was the highest level outside Christmas since June 2021. Among individual retailers, both Tesco and Sainsbury's continue to raise their market share, with Morrisons holding its own and remaining unchanged, while both Asda and Aldi lost market share. Well, despite falling inflation, there's evidence today that consumers are feeling less confident. The Spring Consumer Sentiment Survey from the accounting and business services giant PwC suggests that consumers are feeling slightly less confident than they were in January, but better than they were this time last year. Well, joining me now to talk about this is Lisa Hooker. She's Leader of Industry for Consumer Markets at PwC. Lisa, welcome to you. Are you surprised at this, given the improving picture on inflation?
I think what's happened is people talk about inflation getting better and obviously quite a resilient job market and wage increases. But what they sometimes forget is cumulatively we've seen over 20% inflation for the consumer. And I still think there's that sticker shock in the sense when you've not bought something for a while and you go and buy it and you go, crikey, that's quite a bit more expensive. And I also think people have used up quite a lot of their COVID savings, so possibly are being a bit more cautious around going into savings, which I think is all making sentiment a little bit more volatile and not as strong as you might hope for.
And yet, a larger proportion of people questioned told you that they feel better about their finances. They're in a healthier state than they were.
Yes. And that's probably what's expected. I mean, we've seen about a 6% average wage increase, and inflation has just come down last month to 3.2. So they have got more money in their pockets than they had in recent months, but not more money than they had a couple of years ago. But I think there's a lot of uncertainty out there, whether it's economic, when are interest rates going to come down, whether it's political, geopolitical. And there's still quite a lot of people coming into this year who still had to reset their mortgage, which is actually, they'll feel the pain. So those middle-aged group are feeling a bit squeezed.
Yeah, I mean, how many people are still to come off a fixed-rate mortgage and onto a higher
coming
rate?
into the year, it was about half still had to come off those fixed rates. Yeah. So there's still the impact of that. And we've not really seen a significant reduction in mortgage rates because people are still uncertain when interest rates will fall.
Do you think there's an element of job insecurity out there as well?
I think there's less job security than we saw in 2023, and there's definitely been more noise around people trimming the workforce and redundancies. And I think we saw statistics saying that there was less new graduate opportunities this September. So I think that is playing into people's psyche, albeit at the moment, the employment rate is still pretty high compared to historical levels.
Right. I mean, you saw some interesting variations among socio-economic groups.
Yes, I mean, of course, the people more affluent, inflation's never as big a factor, so they are the most positive. And those people really, actually, the ones on benefits are actually slightly more confident than they were last time round, maybe because they've had inflation-linked increases. It's that squeezed middle that are seeing the cost of food, staples, their mortgage going up, are the ones that actually are feeling the least comfortable.
And what about in age groups?
Well, the age group's always really interesting. The younger people, I mean, people that are still at home till at least 25 these days, are actually feeling more confident because they've got money in their pockets to spend and they want to prioritise spending and going out and buying stuff. The other end of the spectrum, the older age groups often don't have mortgages, are getting interest on their savings, are actually feeling more positive than they have historically and actually want to go out and spend and go on holiday.
What about, one thing that jumped out at me was younger people not making holidays so much of a priority, because we're always told holidays are a really sticky area of spending. People won't forego their holiday under any circumstances.
I think what we saw was like a boom in holiday and holiday prioritisation and bookings in January. And I think for the younger people, it's come off a bit. Again, because I think the price of going on holiday has actually gone up quite a lot and actually was still going up a reasonable amount in terms of last month. So I think there's a bit of now, actually, we do need to be a bit cautious because it's costing a lot more to do some of the activities we want to do.
I was shocked how many people put spending on pet care and pet food above a priority on kids. Is that because more people have pets than kids?
Well, it's actually, we always sort of amuses us. We've seen this now for several years, but pet ownership did go up about 10 percentage points through COVID. So there's definitely more pet ownership. And I think people find their pets easier to deal with sometimes than their children.
That's a good talker, but we'll have to leave that for another day. Lisa, good to see you today. Thank you.
Thank you.
Very sorry, we're going to break into the business news. This is a live shot from Dover just now. A Border Force boat has rescued a number of migrants from the Channel this morning. Earlier we heard that 5 people had died attempting to make the crossing. Those are the latest pictures now from Dover. Some other business news stories for you now. And JD Sports is buying the US fashion retailer Hibbett for under $1.1 billion. The deal is the latest in a string of US acquisitions by JD Sports, which began in 2018 with its takeover of the sports retailer Finish Line. Since then, it's expanded in the United States to more than 1,200 sites. Well, Hibbett, which is based in Birmingham, Alabama, has 1,169 stores across 36 US states, selling brands such as Adidas, Nike and Jordan. Shares of Associated British Foods have surged by nearly 9% this morning after the owner of Primark said it was on track to deliver significant growth in both profitability and cash generation ahead of expectations. The company was reporting an operating profit of £501 million for Primark for the 24 weeks to the 2nd of March. That was up 45% on the same period last year. The company's grocery arm, which owns brands including Twinings Tea, Ovaltine, Ryvita and Dorset cereals, raised operating profits by 34% to £219 million during the same period. Taylor Wimpey warned today that its order book was smaller than it was at this point last year and said it has booked fewer sales so far this year. The house builder said that as of Sunday, its order book stood at £2.1 billion, which was down from £2.4 billion a year ago, representing 7,686 homes, down from 8,576 homes this time a year ago. The company said it remained focused on prioritising value over volume, building a strong order book and positioning itself for growth from 2025, assuming supportive market conditions. The shares are currently ahead by 0.5%. Our Ballymena-based company specialising in rapid diagnostic tests, a Sussex-based engineer specialising in cutting fuel emissions, and a Northampton-based distiller are among the winners of the second Made in the UK Sold to the World Awards, organised by the Department for Business and announced this morning. Well, joining me to talk about this are Lord Offord, he's Minister for Exports, and Dr Poonam Gupta, who's Chief Executive of another of the winners, PG Paper. Welcome to you both. Dr Gupta, let me start with you. What does winning this award mean to you, and what did you have to do to enter?
Well, I think my team basically entered with an application, hoping to win the awards, and I'm very delighted that we have indeed won the award. We are an SME who are exporting to over 60 countries internationally, and winning these prestigious awards actually is huge for myself and my team because, see, these awards add credibility to our company. So when we go out and try to win the contracts. And with the world of social media and everything online, the companies do their background research on us, and awards like this help us in making sure that they see us as their trusted partners.
Well, congratulations to you. Lord Orford, these are slightly counterintuitive when you look at it and try and weigh them up against the ONS data published yesterday. Services exports are absolutely motoring. Manufacturing volumes, by contrast, are still at 2013 levels.
So that's a good place to start, actually, Ian, because our economy is now 80% services and 20% manufactured goods. 80% of the workforce work in services, and 80% of our GDP is in services, 20% in manufactured goods. However, our exports are 55% services, 45% goods. So that tells you that even though we're no longer a major manufacturing country, our manufactured goods are very strong and go around the world and are sought after around the world.
But what sort of message does that send out to manufacturers, though, when volumes are at such a low level? I mean, it's clear something has gone very wrong with UK manufacturing exports.
On the contrary, our manufacturing exports are, if you look at where we sell to the EU 27 and the rest of the world, they're down in both areas. And they're down in both areas because there's been a massive dislocation in world trade in the last 5 years, mostly through the COVID, then Ukraine, and then inflation going up, energy prices going up. That has been a major dislocation in all major markets, whether it's US, whether it's China, whether it's Australia, whether it's Canada, whether it's the UK. And it's been the biggest dislocation in trade, really, since Second World War, with all the disruption to supply chains. So manufacturing, shipping goods around the world has been more difficult in every part of the world for the last 5 years. But the benefit for the UK is that we've got a very strong services economy, which is helping us grow and is more than compensating for that.
Dr. Gupta, I saw you nodding there in agreement. What sort of things are making life tougher for you in terms of exporting?
Well, I agree with Lord Orford there that the shipping costs since COVID actually has really hit businesses hard. They are very volatile, remain very volatile, and with everything that happened a few months ago in the Red Sea as well. So it became harder. The export lead times have gone longer. The customers want goods to be delivered quicker. So we now need to find better ways to ensure that we keep them engaged by helping them with value propositions, where our company also focuses a lot more on innovative products. So you're talking about manufacturing in the UK. We, as PG, are not just providing manufactured goods, but we are also in services, you can say, because we are not just exporting goods from the UK, but we are exporting goods from 17 other countries. So that's where we kind of take advantage of the market in terms of if exporting goods from a certain country to certain other countries becoming challenges, we can adapt and actually provide goods to our customer from perhaps another location, which can get them faster, which is also helping us still grow our business despite all the challenges.
Lord Orford, the new post-Brexit border rules were due to be implemented at the end of this month. It's being widely reported they're not going to be implemented in full. What can you tell us about that?
Well, we obviously, as part of the Brexit deal now, we have to have some checks on borders. But of course, we certainly at DBT want to minimise trade barriers, and we want to make sure this is done in a light touch way and in a proportionate way, in a way that does not cause disruption. And so that is why this is being worked on actively through the Cabinet Office, being worked on and revised to make sure that when it comes in, it is light touch and works for the benefit of all our exporters. I mean, our export story is a very good news story. That's the reality of it. We've just gone from being 7th largest exporter in the world to 4th. And now only the US, China and Germany ahead of us. Our export story is a very strong story.
OK, Lord Orford, Dr. Poonam Gupta, good to see you both this morning. Thank you.
Thank you.
Well, last night's gains on Wall Street, during which the S&P 500 ended a 6-day streak of losses, were followed by a largely positive session for stocks in the Asia-Pacific region overnight. Europe, meanwhile, stocks are also higher this morning. All the main continental European indices are ahead right now. Sentiment's been supported by the latest Flash Purchasing Managers Index survey data for the Eurozone. One major talking point this morning in continental Europe is Novartis. The Swiss drugs giant is up 4.75% in Zurich after quarterly results beat expectations. Well, here in London, the FTSE 100, which last night hit a record closing high, has hit a new intraday record. That's the picture right now. And in fact, that's not far off the record that we hit 23 minutes after the open when the FTSE touched 76.52. It's given back a couple of those gains right now, but still half a one per head right now. Up in percentage terms, the leading gainer, mentioned them earlier in the programme, Associated British Foods, up 9% on its results, while the acquisition it announced earlier today has sent JD Sports up by nearly 6%. To the downside, all of the mining heavyweights are lower on the back of weaker metals prices. Outside the FTSE 100, the investment firm Petershill Partners, very interesting companies, although albeit somewhat niche, that surged by 7% today on news of a $100 million return of capital to shareholders, while International Distribution Services, the owner of Royal Mail, of course, is up another 2.25% as investors await fresh takeover developments. To the downside, Jupiter Asset Management is off nearly 4.75% after reporting further outflows. On the foreign exchange markets, well, the big story today is the yen. The Japanese finance minister has indicated it could intervene to defend the currency. Sterling more or less unchanged right now against both the dollar and the euro. Meanwhile, after falling in 5 of the last 6 sessions, the oil prices rallied this morning. Barrel of Brent crude, look at that. It's gone negative again. It was higher this morning, I promise you. Barrel of Brent crude currently changing hands at $86.96 a barrel. It's more or less unchanged, actually. Well, with me now is Dr. Jimmy Musheshiteri. He's Senior Research Analyst, of course, at Investec. Jimmy, great to see you as ever. Got to start with Novartis. I know it's one that you follow very closely. Seems to have gone down well.
Yes, very much so indeed. Revenues were up double digits this morning. Profits are up 23%. And a lot of that was driven by products that they recently released, so in the last 5 years. So we like those pipeline-driven stories where there's a strong fundamental backing, which is driving the share price.
Which are the big blockbusters that are doing well for Novartis?
So it's got several. The 3 I'll mention. One is Entresto, which is a heart failure drug. And typically, heart failure is an end-of-care type disease where there isn't really much that can be done, but Entresto actually helps to improve the ejection fraction, so the amount of blood that's being pushed out by the heart. That did very well, up 23%. Cosentyx, which is used in psoriasis and many other inflammatory diseases such as inflammatory bowel disease, celiac disease. That also performed very well, again, another 23% or so. And then Pluvicto, which is a new type of therapy. It's called a radioligand therapy where you attach a radioactive molecule and that then goes directly to the cancer instead of irradiating the whole body. So a very targeted radiotherapy. That's a very exciting new area, and that also performed very well, up 46%.
OK. Well, closer to home, results today from AB Foods, very well received by the market. I mean, this is as confident a statement as I can remember from this company in a long while.
100%, and as you said, contributing to all-time highs for the FTSE 100. Finally, we're getting some movement on the FTSE 100. Yeah, AB Foods performed very well. Revenues were up 5%, which is not so much, but interestingly, Ian, there was a 46% theme going on there. So adjusted operating profits up by 46%, adjusted earnings per share up by 46%, dividends increased by 46%, and even sales from Primark, which is 45% of the sales, were up by almost 46%. So very, very strong results there. It is a very well-run company. It is a story where there is a rollout story. So they're not really looking to grow by increasing pricing, but by increasing volume. And the execution thus far has been very strong.
Yeah, now you mentioned the FTSE records. I mean, obviously, a lot of the rally we saw yesterday was down to the weak pound. It's not really a factor today. Do you think people are waking up to the fact that the FTSE is just incredibly cheap compared with some of its international peers?
Yeah, I mean, a lot of ink has been spilled about that disparity between the valuation of the FTSE 100 and the US market. And yeah, I think you're right. The currency does play a significant role in that. If you adjust for some of the major factors, such as the size of the company, in the US you tend to have much bigger companies, such as the growth of value type structure of the businesses. In the FTSE 100, we are heavy with cyclical companies, mining companies, banks, financials. They tend to be much more cyclical. So if you adjust for those factors, the FTSE 100 still is pretty cheap. And I think a lot of investors are looking at that and saying, the US market is very expensive, plenty of opportunity, good quality companies in the UK.
OK, Jimmy, got to leave it there. Good to see you as ever. Thanks for joining me today. Still to come here on Business Live, as the world's biggest creative conference starts today, we'll hear from Adobe about its new AI tools. Don't go away.
The sewage problem is huge, but it's also a massive problem with plastic pollution as well. But yeah, the sewage problem in the UK is pretty horrific. I think the plastic problem is definitely getting worse. We're definitely noticing it more and more. I often hit plastic in the water when I'm windsurfing. You see quite a lot of it, from crisp packets to plastic bags to big plastic containers. And that's global. That's not just a UK problem, it's everywhere. When we're racing, you can hit stuff in the water and you stop instantly. So you go from 35 miles an hour to 0, and that causes injuries. It ends your race. You can lose world titles over it. I've had friends that have lost world titles off the back of hitting plastic in the water. And that's just not fair. In terms of the sewage pollution, I've had to go abroad for training. It's almost impossible. If you think about every day that it's windy in the UK, almost, it's raining, and that's when they can discharge sewage in the storm overflows. So for it to be safe to go in the water, it's so rare that we can have good enough conditions and for it to be safe. In the UK, we have a good monitoring system, so you can at least tell through the Surfers Against Sewage app whether it's possible to go in the water or safe to go in the water. But invariably, it's not ideal. The situation here is really, really terrible. I'm actually having a year off from competition.
Okay.
But I am coming back next year in a new discipline, and so I'm training for that. Can you tell me? Yeah, so I've been a racer for my whole life, and now I'm moving into waves. So racing is about going as fast as possible, 8 people on the race course at the same time, no rules, and the first person over the finish line wins. And now I'm moving more into wave sailing, where it's all about using the waves to surf and then using them as a ramp to jump off.
If you forgot your pajamas, Emirates has got you covered. Fly Emirates, fly better. Thank you.
Welcome back. Generative AI has been a hotly debated topic for almost 18 months now, since OpenAI released its first ChatGPT model to the public. Well, the advent of AI image generation has concerned both artists and intellectual property lawyers alike. Today, Adobe has announced the latest addition of several new AI tools to its Creative Cloud products at the world's largest creativity conference, which starts in London today. Joining me now from the event is Eli Greenfield, Chief Technology Officer at Adobe Digital Media. Eli, welcome to you. I mean, your new service is based on reference images to use as a guide. Could that in itself pose legal and intellectual property challenges for you?
Thank you, Ian, for having me on. Really happy to be here. It's an exciting day for us at the conference where, as you said, we've released the latest version of our Firefly Image Model 3. And we've had Firefly out for over a year now, where Firefly is our suite of AI models that allows everyday creatives, hobbyists, all the way up to creative professionals to be able to generate ideate and create images. One of the things that really has made it very popular, and we've had over 7.5 billion images generated to date, has been our commitment to transparency and commercial safety, and also the control we put in, like the feature that you just described, which we've announced today as part of our version 3 beta of the image model, which is reference images, which you can use in Photoshop, one of our flagship image generation tools. Now, reference images provides customers with a new and unparalleled way for them to provide information to the model when they're using the AI as their creative partner to be able to generate content. It's much more powerful and expressive than just using a prompt alone. And like with every one of our tools, we think that the way customers use it and the way they choose the images they upload is a partnership between us and them. Our customers mostly are creatives. They believe very strongly in proper attribution of content and respecting IP rights. And so we like to put the tool out in a way that makes it possible for our customers to do the right thing. We also engage in a number of different technologies. One is the Content Authenticity Initiative, which we've started back in 2019. We work together with a number of companies to provide this technology that allows customers to expose where content comes from. And we use that in our tools to really help customers make sure that they're using that content properly.
How much are you having to invest in stock and reference images and videos?
So we've had a stock business for over a decade now. It's a very successful business, selling to the creative community and also selling on behalf of the creative community. We have a very large, rich range of customers who partner with us to put their content available on our stock website. And part of that partnership is we also compensate them for using that content for training. So that is an ongoing business for us. It's very successful. We continue to invest beyond that to grow that business, both for the traditional stock business and for the new generative business. We do think that the fact that we have access to this data set that we have developed in partnership with our community of contributors to stock is an incredibly valuable asset to help us build the AI in a way that respects artists' rights and benefits the artists directly. So it's an ongoing investment, but it's an important one for us.
Briefly, if you would, please, who's the main competition right now? I mean, OpenAI have obviously launched their own product, which is similar to the sort of things that you're trying to do.
Yeah, there's a number of generative AI providers out there in the market. There's a lot of space. It's obviously a very new market, and it's growing very quickly. We don't really see them as competition. We think that AI is going to be an important part of all the creative activity out there. And there's room for a lot of different providers to provide different models that serve different parts of the market. One of the key differentiators for Firefly is the way we train it, that we know the license of every piece of content we train on, and we're able to offer commercial safety to our customers, which is a really important piece.
We're out of time, I'm afraid. I'm so sorry to cut you off. Thank you. Good to see you. That's it from me. I'm back at 4:30 with our afternoon edition. Hope to see you then. In the meantime, do stay tuned. Up next, it's Jane Secker. Cheerio.